Hello guys, welcome back to my channel. It's Sharp Blueprint here again. Are you a day trader in need of a strategy that has got an edge that will see you making decent profits from market movements? Then sit back and watch this video till the end, as I'm going to be sharing in this video a day trade strategy that is based off price momentum of the daily time frame. Now, firstly, this is a daily time frame chart right in front of your screen. And now, if you look very well, there's a pattern that tends to repeat that tends to repeat itself very often on the daily time frame. Now, looking at during these times when the market was rallying to the downside, or clearly had what? The momentum very bearish. Safe to say the sellers were very much in control of the market. What you tend to see after every daily candlestick closes. Now, guys, this is the daily time frame, as you can see. So every candlestick here represents an entire day. So what you tend to notice, the pattern you tend to notice here on the daily time frame is after every daily time frame closes, while the market is headed to the downside, you tend to see the market usually begins the next day with a buy movement. So you tend to see the market usually begins the next day with a buying movement and then reverses, giving the daily week to start what? Selling to the downside. I'll take a closer look at the next day. You can see this daily candlestick close right here. What do you get to notice? The next daily started with what? The very same buy movement. And then we had what? Before we had the selling, leaving us the wicks right at the top of the candlestick. As you can see, now you can look this up on any market instrument, paying attention to the daily time frames only, and you get to see more often than not, this keeps repeating itself on a daily basis. Now let's take a closer look on this bullish movement. Clearly, what we're seeing the market's momentum to the upside, with the buyers clearly dominating the markets for the last 5 days. And what you get to notice after every daily closes, you tend to see the market begins with selling, and then afterwards starts to buy. So the market begins with selling, then afterwards starts to buy. You can see the next daily candlestick close right here. The very same thing again. So the next after this daily close right about here, this next daily candlestick opened and then started first with selling. Afterwards, what? the buy momentum kicked in back into the market. You can see this next day after the close right here. What can you get to notice? We had the next day started with selling. Afterwards, what the buys kicked in, leaving the lower wicks right at the bottom of the daily candlestick here. And then we had what? The bullish momentum kicked right back into the market. Now, guys, here also, you can tend to see this was the day before yesterday's daily candlestick close. You can see as soon as we had the close, yesterday's daily candlestick opened. And then the very same thing started. So we had a sell. Afterwards, what? The buys kicked in, leaving what? The lower wicks right at the bottom of yesterday's daily candlestick close. And then what? The momentum kicked right back into the market. Now you can clearly see yesterday's daily candlestick has closed. And then the very same thing is looking like it's about to happen again, guys. You can see I'm not making this up. Yesterday's daily candlestick has closed, and you can see clearly what today's daily candlestick has started with the same pattern. Talked about selling first, and then afterwards, most likely leaving us with a lower wicks. And then we have the bullish momentum then kick right into the market. Now, having fully known that this is a common pattern on the daily time frames, now the strategy helps us take advantage of this pattern in line with what? The daily time frame market momentum. So what does the strategy entails? So we're going to be making use of 2 time frames alone for the strategy. We're going to be making use of the daily time frames and the 15 minutes time frame only. So the daily time frame and the 15 minutes time frame. The 15 minutes time frame we will be using for our entry execution, and the daily time frame will be used to mark up the previous day's candlestick close. The previous day's candlestick close will make use of the daily time frame to mark up the previous day's daily candlestick close, whilst we'll use the 15 minutes time frame for our entry executions, having fully known that what this is a pattern that is seen to repeat itself in the markets on a daily basis. Not every day, but most of the time, you get to see this repeat itself on a daily basis. So what you tend to do is come on the daily time frame, and then you mark the previous day's close, having fully identified the momentum of the market. And then there's also 2 indicators that we'll be making use of for our entries moving down to the 15 minutes time frame. But very quickly, just like what I've highlighted right here, every one of these daily closes, this next day close, this next day close, we are going to be going to the 15 minutes time frame to see how we would have what gotten our buy entries in line with the bullish momentum of the market, having fully identified that the pattern usually keeps repeating itself on a daily basis, where the market opens, starts off with selling, and then eventually flips toward buying in line with the bullish momentums. The day opens, starts off with selling, and then flips to buying in line with the daily bullish momentum. Now, every of these lines, take note, guys, are the daily time frame closes, as we have established right here. Now, let's quickly jump down to the 15 minutes time frame to see how we would take advantage of this market pattern to get suitable buy entries from the 15 minutes time frame. Now, coming down to this is 15 minutes time frame, I said we would need two indicators to get ourselves the perfect entries. The first indicator being the 50 exponential moving average, as you can see right here in my screen, exponential moving average 50. And then the next indicator being the awesome oscillator indicator, which I also have right here under the indicators window. Now, guys, the rules for our entry when it comes to the 15 minutes time frame would be, for buys, we want to always have the candlesticks above the 50 exponential moving average. So if we're looking to buy, we always want to see what? That the candlesticks are always trading above the 50 exponential moving average. If we're looking to sell, if we're looking for sell positions, we always want to see that the candlesticks are trading below the 50 exponential moving average. At every time we're looking to sell, coming down to the 15 minutes time frame, we always want to see the candlesticks below the 50 exponential moving average. And then also the next entry signal would be the awesome oscillator flips. The awesome oscillator flips. Now, let me quickly explain what I mean by that using the awesome oscillator on this. Now, clearly, looking at the awesome oscillator, there are certain points where the awesome oscillator tends to flip from negative to positive and positive to negative, vice versa. Flip, cross, meaning the very same thing. Now, at a point like this, what would you notice? That the awesome oscillator has flipped or crossed from the negative, where it has previously been trading at the bottom, and then it has crossed over to the top. So this is that point where we have what? The flip from negative to positive. The awesome oscillator cross from negative to positive. Whereas right here, we would have the awesome oscillator cross from positive to negative. So previously, as you can see, it's been trading above. And then you can see right at this level, we had that cross from above to beneath, from positive right to negative. Let's take more examples of this. Right here, we have ourselves the awesome oscillator cross from negative to positive. You can see previously we've been trading below. Right here, we have ourselves the cross from below to above. So we have the awesome oscillator cross from negative to positive. Right here, you can see we have what? The awesome oscillator cross from positive to negative. So now, guys, coming to the awesome oscillator indicator, whenever we're looking to buy, we're always looking for what? The point at which the awesome oscillator crosses from negative to positive. Whenever we're looking to sell, we're always looking for that point where the awesome oscillator crosses from positive to negative. That will determine our entry when we then get in on what? Our buy or sell positions. So clearly, guys, coming down to the 15 minutes time frame, we've established the fact that what? If we're looking to buy or sell, the first rule states that what? If we're looking to buy, we always want to see that the candlesticks are trading above the 50 exponential moving average. If we're looking to sell, we always want to see that the candlesticks are trading below the 50 exponential moving average. That's the first rule. The second rule of the entry from the 15 minutes time frame states that what? If we're going to buy, we want to buy at the point where the awesome oscillator crosses from negative to positive. And at that point, we also want to have what? The candlesticks above the 50 exponential moving average. If we're looking to sell, we only want to sell when once we have the awesome oscillator indicator cross from positive to negative. And also at that point, we want to have the candlesticks below the 50 exponential moving average. I do hope by the time we get to look at typical chart example of this, this will be even more clearer. Now, clearly, guys, take note, we have identified every one of the closes from the daily time frame. Like we said, we'll be making use of two time frames for the strategy, the daily time frame, and then the 15 minutes time frame for entries. The daily time frame we'll use to mark out what the previous day candlestick close, which we have done for every one of these examples. As you can see, or marked out the daily candlestick closes for every one of these. And now coming down to the 15 minutes time frame. I think we have ourselves the first level right here. Okay, just to make this much easier, let's take it one at a time. Let's take this one at a time, one after the other, just so it doesn't get confusing by the time we go down to the 15 minutes time frame. So the first level we're marking out is this daily candlestick close for this very day. And then we're going to be looking to trade this bullish movement, but knowing fully well that the next day would start with what? Selling first before the market then switches to the buying momentum. So going down to the 15 minutes time frame, how would we have gotten an entry for that? Knowing fully well that the market has the usual pattern. So yeah, I think we have that right here. So this was the 11th. And yeah, sometime around here was where we had the daily candlestick close for the 11th. Now you can see the crosshair, and then you can see the date timestamps attached at the bottom of the page. We have the 11th, or we have, and then we have the next day. So as you can see, the market started out with selling. Sorry, guys. Trying to backtest with this is a little bit hectic sometimes. So, okay, we have this for the 10th. So, which means we're looking to trade the 11th of July candlestick, daily candlestick. So, let's go back. We're looking to trade the 11th. So, 10th of July. So, where did we have the 10th of July candlestick close? Right, so if you follow my crosshair, you'd see this is where we had the 10th of July close right here. Right here is where we had 10th of July is close. And then because we're looking to trade a bullish momentum of the market, or very much expecting for the market to start up with selling. Now the rule states so the market started up with selling. We need to have that point where whilst we are selling, we said rule number one, we only want to see, we only want to buy when once we have the candlesticks above the 50 exponential moving average. So you can see clearly we have the candlestick below the 50 exponential moving average, right? Right at this point, you can see we have crossed below to above. Or do we have, at that point, do we have the awesome oscillator indicator cross from negative to positive? No. You can clearly see at that point, the awesome oscillator indicator is still trading at negative below. So we're not buying just yet. And you can see price traded back below the 50 exponential moving average, which is against our rule. We're only looking to buy when once we have price above. You can see we're traded back above the 50 exponential moving average right here. But then do we have the awesome oscillator indicator cross from negative to positive at that point? No. You can see at that point, follow the crosshair, guys, down to the awesome oscillator indicator. You can see we have the awesome oscillator indicator still trading at the negative. And you can see what price came back again below the 50 exponential moving average against our rule number one. And then, of course, we have now back above the 50 exponential moving average. So rule number one, if we're looking to buy, we always want to have the candlesticks above the 50 exponential moving average. Rule number one is met. Rule number two says what? If we're looking to buy, we want to buy at that point where we have the awesome oscillator indicator cross from negative to positive. Do we have that present right here? You can see, yes, guys, we have that present. You can see at this level, we have the awesome oscillator indicator has crossed from negative to positive. Now, this is the point where you then get your buys. So we would have had our buy right at this point. Usually, we would want to have our stop loss come at these lows right here, but that would give us a rather too big stop loss. So We're always looking to target a 1 to 2 hour arrow. We're always looking to target a 1 to 2 hour arrow. For this, so we have our entry here, owing to the fact that what we have at that level, we have both roles for our entry execution has been met. The first rule being the candlesticks above the 50 exponential moving average, and then the second rule being the awesome oscillator indicator cross, well, awesome oscillator indicator cross from negative to positive. Both rules has been met right here. So we'll take our entry, have ourselves a target of a 1 to 2 risk to reward. You can see that, guys. We have our take profit target smashed right here. Now, we're looking to target anyways from a 1 to 2 or 1 to 3 maximum. I'll be sticking with 1 to 2 for this. Now, let's go back to the daily time frame and then pay attention to the next day. Now, for the next day, being the 11th of July. So let's go and identify the close. You can see that's the daily close right there, 11th of July. So on the 12th, all we would be expecting was for the market open, started off with selling, and then we're going to capitalize off that pattern, get our buy entries from the 15 minutes time frame to ride what? The daily time frame bullish momentum. So we're clearly looking to trade the 12th bullish momentum. Going down to the 15 minutes time frame, this is where we need to have our entry rules back in check. So you can clearly see this was our best initial trade, guys. Now this is where we have 11 candlestick closes. So right here, this is where the candlestick closed for 11, right? And then we knew for a fact that the markets for 12th of July would start off with selling, as is the pattern clearly seen from the daily time frame. Start off with selling, and now we can then get in on our buys, because usually after the selling, the market then tends to flip from the daily time frame to buying, leaving the daily time frame wicks on that very daily candlestick. But then, do we have our rules in check? Rule number one is if we're looking to buy from the 15 minutes time frame, we are only going to buy when once we have our candlesticks above the 50 exponential moving average. You can see very clearly we can't buy just yet because we have candlesticks at this point below the 50 exponential moving average. So we'll keep waiting. Guys, you can see right here, we have what? The candlestick has crossed above the 50 exponential moving average at this point. That's rule number one. So at that point, do we have also the 50 exponential moving average cross from negative to positive? Let's see if we have that. So right here, where we have the the candlesticks now above the 50 exponential moving average, which is our buy entry confirmation. You can see Right here, we have both entry rows in shape. We have both entry rows in shape. Row number one, we have the candlesticks above the 50 exponential moving average for buying. And then row number two, we also have the awesome oscillator indicator has flipped from negative to positive. So now we have ourselves our entry for buys. We have ourselves our entries for buys right here. Or we have both row number one and row number two checked. Typically, we would want to have our stop losses below the lows right here. Or usually it tends to give us rather too big stop loss. So we're always looking to target a minimum of 1 to 2 risk to reward, and then a maximum of 1 to 3 risk to reward. So you can see 1 to 3 was it right here. You can see we would have had ourselves the previous day's trade still running, because it was only at this point we had the previous day's trade hit for a 1 to 2, and then this current day for the 12th of July as our take profit hit for a 1 to 3 or 1 to 2 also. Perfectly okay. Minimum 1 to 2, maximum of 1 to 3 risk to reward. Now we go back again to the daily time frame. We'll go back again to the daily time frame. So we currently are traded 12th of July. So we go and then identify the candlestick close for 12th of July right here. And then what? Knowing fully well that 13th of July would start with the usual market pattern where we would see price sell off and then flip to start buying in line with the bullish momentum of the market. So how would we have gotten our buy entries on the 13th of July? This takes us down again to the 15-minute time frame where we would have our entries for buys. So 15th, 13th of July rather. So where did we have 12 close? So right here, you can see this is where we have 12th of July candlestick close, guys. Follow the crosshair and then the timestamps at the bottom of the page. See right here, we have 15th, we have 13th of July has kicked in. So we need to see what the market start off with selling, right? Which we did. And then we can now take our entries for buys. How do we get our entries for buys? We need two rules to be met. Rule number one, we have the candlesticks above the 50 exponential moving average. You can see right here, no, we don't have that. So we wait till we have the candlesticks above the 50 exponential moving average. You can see right here, we have the candlestick crossed from below to above the 50 exponential moving average. Rule number one has been met. At that point, do we have rule number two also met, where we need to see the awesome oscillator indicator cross from negative to positive? No, you can see the awesome oscillator indicator is still trading at negative at that point. So we'll keep waiting till both rules are met. Right here, not yet. Now you can see right here, guys. So yeah, right here we have the awesome oscillator indicator has crossed from negative to positive. Follow the crosshair, guys. You can see the awesome oscillator indicator there has crossed from negative to positive. Rule number two checked. Is rule number one checked? Yes, clearly we can see the candlesticks are trading above the 50 exponential moving average. So yeah, we have ourselves our entries for buy. We have ourselves an entry for buy right here. Yeah, so we can have our stop loss below or just have a tight stop loss, whichever way we want to have that. Just give ourselves a reasonable room for the markets to do its thing. So we're looking to target a minimum of 1 to 2 risk to reward, maximum of 1 to 3 risk to reward, because this is usually trading in line with the daily time frame market momentum. So a maximum of 1 to 3 risk to reward. You can clearly see we have both targets hit right here. Clearly we have that. Now back again to the daily time frame. So we just traded the 13th of July. So back again to the daily time frame. This right here is the 13th of July. So now we'll move this to the candlestick close for 13th of July right here, guys. Now we're looking to trade the 14th of July, being yesterday's daily candlestick, as is the market's pattern on the daily time frame. Would usually see the market start off with selling and then flip to what? The buying, where we'd see the bullish momentum kick into the market. So moving down again to the 15-minute time frame, where how would we have had ourselves an entry for buy, knowing fully well the market's pattern on the daily time frame? Moving down to the 15-minute time frame, of course, we need two rules to be met before we take an entry. So where do we have the 13th of July candlestick close? 13th. So 13th closed. Oh yeah, so 13th closed right here. Guys, follow the crosshair. You can see the date and the timestamps just at the bottom of the page. So 13th of July closed right here. So 14th of July has opened, as is the pattern of the market on the daily time frame. We would have to see the market start off with selling. Start off with selling, and then what needs to see the market move back again, what, to bullish. Where do we get in on buys? How do we take our buy entries? We need tools to be met. Do we have the candlesticks above the 50 exponential moving average at this point? No. Candlesticks are clearly trading below the 50 exponential moving average. So we'll keep waiting till we have rule number one met. Right here, you can see we have rule number one has been met. The candlestick has clearly crossed the 50 exponential moving average from below to above, and it's currently trading above that. Rule number one has been met. Do we have rule number two met at that point? No. You can clearly see the awesome oscillator indicator is still trading at the negative. So we keep waiting till we have both rows met. And right here, guys, you can see row number two has been met. The awesome oscillator indicator has clearly crossed from negative to positive. And then also we're clearly seeing the candlesticks trading above the 50 exponential moving average. Now we have ourselves our entry for buys. So right here is where we have ourselves our entries for buys. Have a stop loss, just some reasonable distance. Typically, we would want to leave it below the lows, but just some reasonable distance. And then we're looking to target a 1 to 2 risk to reward on this. So clearly we still would have been holding this position, which is about to have our first level take profit target hit for a 1 to 2 on this. Now, moving to the current state of the markets, as yesterday's daily candlestick for 14th has clearly closed. And then we can then move this, of course, to this point right here, where we have yesterday's daily candlestick close. Now, let's take this back to the 15 minutes time frame and see what we would love to see before taking our buy positions from. So all we want to see is what clearly we're seeing. Oh, number one is perfectly okay, but then we'll need to see the awesome oscillator indicator cross back to negative and then cross back again to positive. At that point where it crosses back to positive, would most likely see right here on the 15 minutes time frame, the candlesticks would have traded below the 50 exponential moving average and then crossed back above the 50 exponential moving average. And then and only then, when once we have that, where we would have both row number 1 and 2 met, can we then take an entry for buy. So let's quickly take one more example on this before, just to make sure we have enough clarity on this. Let's look at 20 volatility 25 index. Yeah, so 25 index, you can see. Let's look at yesterday. How would we have gotten ourselves a nice entry on volatility 25 index? So we have, this was where we had 2 days ago candlestick close, that being the 13th of July. So how would we have taken advantage of the bullish momentum of the market, knowing fully well that the market on the daily time frame has a pattern where it starts off the next day with a selling and then flips back to buying, with the bullish momentum then kicking in. So this takes us to the 15 minutes time frame to look for an entry that would have given us a perfect trade execution for yesterday being the 14th of July. So right here on the 15 minutes time frame, let's move our cursor to where we have 13th daily candlestick close. So right here, we have the daily candlestick close for 13th. So we knew yesterday's daily candlestick being 14th, as is the pattern of the daily time frame, would start off with selling. We'll start off with selling. Now that selling needs to what? That selling needs to switch the awesome oscillator indicator to the negative, right? Which you can see has happened right here. And now the awesome oscillator indicator is clearly trading at negative. And then we need now both rows to be met. Row number 1, we need for the candlesticks to be trading above the 50 exponential moving average for us to take a buy. And then we need for the awesome oscillator indicator to cross from negative to positive for us to have ourselves an entry for buy. So clearly you can see right at this point, we have, so yeah, right at this point, we have the 50 candlesticks trading above the 50 exponential moving average. But then you can see from the indicators window, you can see the awesome oscillator indicator is clearly trading at negative. So we'll keep moving every 15 minutes to the point where we would have had the cross on the awesome oscillator indicator from negative to positive. Right? We have ourselves what? The awesome oscillator indicator has crossed from negative to positive. Row number 2 checked. Also, number one checked. Clearly, we're having to see that the candlestick is trading above the 50 exponential moving average. Now we have ourselves our entry for buy. Now we have ourselves our entry for buy. Just give price a little room. And then, like we said, a 1 to 2 minimum risk reward. Or a maximum of 1 to 3 risk reward, which clearly is about to get. Okay, we have that already hit. We have a 1 to 2 risk reward already hit on this. And this is how we would have taken advantage of what? The pattern clearly seen on the daily time frame, the market pattern clearly seen on the daily time frame, and then capitalize off that pattern, get ourselves a decent buy entries for yesterday being the 14th of July, in line with the bullish momentum of the market on volatility 25 index. Now, guys, that is the strategy in a nutshell. I would implore you go over this video a couple number of times just to get a grasp of the strategy. And then, of course, if you need more clarity on this, my Telegram channel is very much open for as many that are looking to get on board, where trade setups are sent out on a daily basis. I'll leave a link below in the description of this video. Guys, if you find this video insightful, do well to leave me a comment what you think about this strategy. And then, of course, give the video a thumbs up. If you're not yet subscribed to the channel, guys, I really can't say this enough. Go ahead and hit the subscribe button so you don't get to miss out on subsequent valuable videos like this. And do well to turn on post notification, guys. See you in the next video.